presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to John in Orlando. Hey, John, what's going on, brother?
Hey, Tom. Good afternoon to you. How are you?
I'm doing great, man.
I want to thank you, first of all, before I ask you about the stock. You and Tim Ward and all the gang at TFNN. I had a really, really good year after the October call you guys made. My 401k is up 72%.
Congratulations, man.
A couple of things I made with Coinbase and other stocks that I made, and I've had a good year.
And we appreciate you growling and prowling with us, man. That's a beautiful thing.
Now, Tom O'Brien.
What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. I hope you all are having a fantastic day. As I said during the 3 p.m. stock market update, we're going to be joined today by Tim Ward. He'll be on in the second segment, as it is Thursday. Taking a look right now, the SPY, you're trading off about 0.05%. We're trading up around the 606 to 605 level and dumped down to 602.63. Kind of traversing back up to that, of course, seeing some resistance around that 604.30 level. We'll see if we can kind of push through for the rest of the day. The composite trading off about 0.05% at 19,682.24 cents, with the Dow Jones Industrial off about 0.5% at 44,654. You have the Russell Futures trading off about 0.67% at 2,308. DXY trading at 107.65, with crude oil futures trading at 70.50. That is off 0.75%. Trying to see if anything else is going on. Tesla, I mean, man, this has recovered a little bit, I think, from earlier in the day. You're getting down, pretty low here, right around that 364 level. Come back to 374. I mean, this is like strong movement throughout this day to either side. Now you're bouncing off that 368, at least on the daily. I still continue to be very bullish on this. I think what's going on here, especially with that little bump, is some news with Optimus. Okay, so they're essentially saying they're going to do a hiring push at the Fremont factory for Optimus production. Again, I'm very skeptical that Optimus will be able to do anything within the next, decade. Certainly $10 trillion of revenue is very strange, and I'm not sure how he's getting that number at all. So that's something that I think probably could have pushed this equity up a little bit. But in reality, they're extremely weak. You had more numbers coming out. German sales are bad. Tesla sales fall 60% in Germany. Is obviously he's backing Alternative for Deutschland, which is a relatively, I would say, controversial political group over there. They have Alice Weidel. She's running for the chancellorship. So you're going to see long-term depression in EV sales in Germany for sure. I would assume this is probably going to be the case in Europe as a whole. And something that I think is important to understand is that there is still growing demand for EVs in Europe. Tesla is just, not only getting, a smaller portion of that cut, but the amount of sales are really kind of shrinking. So you have multiple things going on there that can kind of be a depressing factor for revenue in Tesla. So you're trading off about 2.54%, 368.49. And I mean, you've had a substantial move since we've reached the all-time high, right? I mean, we were trading at 488.45, right? Coming all the way down to 368. I mean, within, I think this is like 52 days or something like that, you've moved $122. Okay, and I have a very big kind of bearish case against Tesla going into May. Really believing we're going to give back a lot of these rallies that we're seeing here, namely the Trump rally. I think the stock should probably be trading near its August or July lows, but we will see what happens and what the market decides. However, I do think the sentiment is kind of drying up for Tesla a little bit, and you can also see with some of these larger stocks, so I mean Microsoft, Google, these stocks got annihilated during earnings, right? And they weren't even necessarily bad reports. It's just, hey, we're still growing. It's just contracted a little bit. The reaction to that is really should have been the same reaction with Tesla's earnings, right? But you have this kind of meme potential, or this meme dimension rather, to Tesla. And I think that is going away very quickly. I'm really not hearing a lot of the same things like buy this dip, I've been loading up, nothing like that. I really think these numbers are very bad. And again, as the market continues to be scared of illiquidity at some point, and we saw that with the tariff threats, and who knows what can happen, right? Who knows what the Trump administration will say tonight or tomorrow morning that could really shock this market a lot. I think Tesla's going to continue to see kind of an erosion at its stock price. And, I'm looking at, this roughly 52 days, right, that you've moved from 488.45 to about 367.71. You have a 439.36 is really where this closed at, but I am taking where it's trading at for the high there. If you look at those May 16 contracts, and this is not the thesis, right? The thesis really is they're selling less cars. I don't think that full self-driving will be there, and I think Optimus is also just kind of a way to keep the stock pumping until something happens with it, right? But this is, to May 16th, you're having about, I think, 100 days right now. We've seen that this equity can move quite a bit at $122 over a 52-day period, So it's not unheard of that, you can, it's not that it's not unheard of, but it's not outside the realm of possibility that you continue to see erosion and still account for days where people might bump it up only for it to sell back down. I just don't see why you would hold this in a fund, right? The point for Tesla now this thing needs to sell off, and they need to prove that they're going to be able to deliver on the remarks that they've given, right? And I think it should be treated the same as Apple. It should be treated the same as Google and the same as Microsoft. When their earnings are, like I said, those earnings for those other stocks were not bad at all. Tesla's were horrible, like actively horrible. So anyways, you have Vuzi off about 2.35%. You got Lunar trading off about 2.42%, with Palantir trading up 7.5%. I think their CTO spoke today. I guess you also have news here, adds Elon Musk's AI chatbot Grok to the AIP. So, this is getting a ton of attention, is equity. And it is, strong up here. You have similar kind of volume as you usually do, right? Now you're at a real all-time high. I'm sure we will probably get some backing off of this 109, but this equity is staying very strong. And you're having a lot of analysts reprice. Again, as I always say, you don't know why analysts give those kind of numbers, so it's kind of important to do your own due diligence on it and kind of make your own decisions. But it's kind of my thought on Palantir. And looking at some of the other satellite companies, as we're talking about Planet Labs and Lunar, you have ASTS trading up 8.94%, making deals with a lot of very large telecom companies. And I start to wonder, building out our satellite fleets, I really think is going to be a major source of, not source, but a major spending of CapEx, Folks, stay right there. We'll be right back. We're going to get Tim Ord on the line for us.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. Before into the break, we were looking at ASTS. That is a satellite company. I'm actually, I think, becoming a little bit bullish on this. I want to do some more research for my end, but I'm loving the updates on satellites. You're seeing a lot of demand from a lot of different companies on this. So you've had some very strong movement to the upside over the past few trading sessions. On non-negligible volume, you have a high of 39.08. I'm not sure we'll reach that before we have some kind of pullback in the equity, but I can absolutely see this at least getting to 30 in the next month. There's a lot of demand for just satellite companies right now, right? So it's interesting to me. I really want to look some more into this. Again, they've been really mixing up with a lot of the telecom companies, which I think is phenomenal. Yeah, FCC for testing services in the U.S. That was 6 days ago. Secure Special Temporary Authority. So, there's some major movements on it. AST Space Mobile stocks declined. This was for Starlink, but the fact of the matter is that you're having a lot of just kind of interest from Verizon and other large telecom companies. So I think there's enough room in the game for something other than Starlink to play, and it seems like ASTS is really the one that's kind of poised to do that. Trading at $5.4 billion right now. We'll talk a little bit later about some interesting stuff with crypto. You had the old CEO of PayPal saying that he thinks that crypto and Bitcoin in particular is better than gold. I am not so sure about that. We can discuss a little bit further, but let's move on right now. Every Tuesday and Thursday, we are joined by Tim Ord of the Ord Oracle. You can go over to his website, check out what he's all about at ord-oracle.com. Additionally, you can look at all of our archived interviews right on our YouTube channel at Tiger Financial News Network. If you decide to do that, please consider giving the video a thumbs up. Please consider subscribing. It helps us out immensely, and I would absolutely recommend checking out ord-oracle.com. Tim, how are you doing?
Good. So, week's ending here, a couple more days. So, actually, market's kind of sticking in there.
Yeah.
Let's go take a look at it.
Absolutely.
So chart one, this is updated today. Just kind of a reminder where we are. But the bottom window is it's called the Zwag Breast Thrust Indicator. I presented this quite a few times over the last couple of weeks, but it's just more of a reminder where we are. But anyhow, the bottom window, I'll describe it again, is the NYSE advancing issues over total issues with the 10-day average. And to trigger the Zwag Breast Thrust Indicator, it needs to get below 0.4, then rally to 0.6 in 10 days or less. Well, we did get down to 0.41, but we did rally to 0.61 in 6 days. So my opinion, that's close enough. I've labeled the other swag breast thrust indicators going back to 2022. If you look at the bottom of 2022, from April until actually April to April, the whole year, you had 3 swag breast thrust indicators in that percentage, in that area, picking out the bottom. Didn't pick out the exact bottom, but to get 3 in a year is unusually a strong bullish sign. Normally you get 1 and that's good enough. Here we got 3, but anyhow, we got 1 triggered here. Started basically 1st of January, and the market's rallied up. Can be some consolidation sometimes, but in general, pretty much marks the low. Mm-hmm. So anyhow, this predicts the market will be a bullish situation this year because we triggered his swag breast thrust indicator. That's my whole point. So things can change, but right now I'm still bullish for the year. Let's go to chart 2. This is starting to get real interesting. We talked on Tuesday. I think I bet this is one of these times where the market goes up and the trend goes up with it. And that's exactly what's happening here. A couple of weeks ago, the trend really wasn't even in bullish territory, even though we're higher than a couple of weeks ago. The trend is. The 3-day trend is at the bottom. It came in 1.26 as of yesterday's close. Next higher window is a 2-day trend. Again, anything above 1.2 is bullish. We're coming in 1.38. Now, I had a 1-day here, above that, but I changed it to a 5-day. And the 5-day is coming in 1.32. And the top window, which is basically the main one because it carries the longest time frame, and it's a 10-day trend. In other words, 2 weeks of trading. And it comes in 1.11, but it's steadily improving here, even though the market has rallied. This is all bullish. You want basically the market to go up on fear or panic. Fear might be a better word, but anyhow, if it's going up and the trend's staying pretty high, then that's usually implies that the trend will continue. I marked other times here. If you look in June of 2024, if you notice in that period, there was really no decline, and the trend went up as the market went up.
I see.
And that's probably what's going to happen here. The market's going to keep going up, and trend's going to keep going up. What's going on here? The public's selling into this rally. And that's usually a bullish sign. If the public's really buying into the rally, usually a trend gets really low to around 0.5, 0.6, sometimes even lower. And that's usually a bad sign. If the public gets really involved with the rally, normally those rallies don't last long, and you get trends like a 10-day trend down around 0.9 or something. A lot of times those comes at intermediate term highs. But here we got a kind of improving trend as the market's pushing higher. So I'm still long. It looks okay. Let's go to chart 3, kind of look at the short term here.
Yep.
Chart 3, that blue area I got shaded is all where that area trend readings are near 1.2 and higher. So you got a huge support area between basically 582 to 600. So if the market does go up and come back down, most likely this area is going to be support because you got panic in it. And once panic happens in an area, if you go back into it, that panic will, in other words, trend readings will rise again in that area. So I'm calling this area a big support area. So the decline, in my opinion, if 6 months down the road we pull back, this is probably the worst case scenario. We'll pull back too. I did also list the times when it in blue there, in blue print, when the trend closed at 1.2 or higher. I have a 1.17 in there. I thought that was close enough. But anyhow, if you notice over the last couple of weeks here, you got as many trend readings above 1.2. I think there's about 10 days, and of those 10 days, you got 6 days trend readings above 1.2. So that's a lot of panic forming, even though the market's gone up, and we're kind of, in my opinion, starting to break out to the upside here. So trend-wise, we do have the panic panic, which panic in general is energy for the market to move higher. And so even though the volume's pathetic here, you got fear in the market. And fears is what you got to have to push the market higher. So I know we're almost into a break here, but it looks good. So I'm staying long. We can cover the gold when we come back.
Definitely. And so, I mean, if you see like the trend shrinking then, or we can talk more about this when we get back, but I'll ask if the trend is shrinking, we're still going to the upside, does that give you pause that perhaps we might come back down?
Yeah, well, we can discuss that.
Perfect.
We'll discuss when you get back.
Perfect. Folks, stay right there. We'll be right back with Tim Ward right after this break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The events for this month are February 14th and 21st, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. I'm joined right now by Tim Ord of the Ord Oracle. You can go to TFNN.com, go to the services tab. We have 2 fantastic webinars from Tim Ord. That is a secret secret ratios, 6 secret ratios every trader should know. And then the signs of market tops. I really recommend the market tops one, especially as we're kind of getting into very topping pattern, if you will. Additionally, you can go to ord-oracle.com, that is the ordoracle.com, and check out his website. Tim, before we went to the break, we were taking a look at chart 3 with the SPY. Some nice, movement to the upside still, and you're having, I think you said 6 out of 10 sessions where the trend is closing at or right near or above the 1.2 level, and that's kind of suggesting to you that this movement to the upside can have some energy still.
Right. Yeah, we're still like a trend right now is 1.18. Market's almost up a little bit, but unchanged. But you talked about right before the break.
Yes.
If you go back to chart 2, and on the top window there's the 10-day trend, and the 10-day trend, when you get down around 0.9, you're going to have to visualize it there, but if you draw a line across 0.9 on that chart, and you'll notice all those times you got down below 0.9, if you draw a trend line down to where it appeared on the SPYs, it was the top.
I see.
So that's the reason why it's dangerous. Matter of fact, we had one back in late December. We got the trend down to, I think it was actually 0.9, and he kind of pulled back over the next couple of weeks. So now we're heading back up. But you get 10-day trend down around 0.9 or lower is usually not a good sign.
Yeah.
So I just wanted to put that out there. You're talking about trend closes that are low. If it's consistently low over a period of time, a lot of times that's too much optimism for the
no, that's
market.
actually fascinating. I'm seeing this right now. Folks, if you want this chart, just email me, Jacob at TFNN. But yeah, I see exactly what you're talking about, right at 0.9. And you're hitting top patterns.
Around 0.9 or lower.
Yeah.
The lower it goes, the more bigger that top is.
I
so
see.
if you get down like 0.8, that would suggest a larger top than 0.9 on the 10-day trend.
Okay.
So, something to watch. I keep, in bottoms, the opposite way is 0.2 or higher, preferably higher, because the higher that above 1.2, the stronger the next rally. So,
okay.
So anyhow, that's how that works. So let's go to chart. You want to look at the gold market here?
I think we should, yeah, because we had that recent top of 29.06, pulling back a little bit right now. So curious to get your insights on this.
29.06.
Well, at least in the gold contract, yeah.
Oh, okay.
I know we're looking at GDX right now.
I'm kind of looking at the gold issues. The reason why I think it's going to actually outperform gold. So far, it hasn't. But I showed you a couple of charts that I think it may over the next maybe 12 months. But chart 4, we've been looking at the monthly cumulative advanced decline and monthly cumulative up-down volume on Tuesday. Well, this one is weekly cumulative advanced decline and cumulative advanced, that's the bottom two windows.
Okay.
And anyhow, as long as they're above the mid-Bollinger Band, the market's in an uptrend, and they are. So the weekly charts are up. Actually, the monthly charts are up also. So it's kind of a reconfirmation of what the market's actually doing here. And these signals, I marked the years in the past, how long those signals last. And the last one came in January 2021. It was a sell signal, pretty much stayed on a sell signal until March of 2022. So that's close to a 3-year period. And so can the market go up for 3 years? Momentum will tell the story. Once the advanced decline and up-down volume kind of runs its gamut, I guess you might say, and start to turn down, that'll be where the next top will occur. And where will that be? I'm not sure. We'll have to wait and see. But right now, the trend's up according to the weekly charts, and actually according to the monthly chart. If you flip to chart 5, so it's just real kind of early to talk about where's the next exit game in the gold market.
Yeah.
Because gold market's cyclical. It goes up, it comes right back down. And so the top window is actually the HUY, just because it goes back further than GDX and XAU. So I picked the HUY index. But I marked the times. Anyhow, the bottom window is the weekly gold contract. Next window up is the weekly HUY gold ratio. And the top window is weekly HUY. And for the middle window there above the weekly HUI gold ratio, I have the RSI. And so this is a weekly time frame, not a daily time frame or a monthly time frame. But when things get kind of exuberant, this ratio will really rise. And when that ratio rises compared to the price of gold stocks are really doing well. And for some reason, when gold stocks doing really well, if it does really well for too long, it's going to go into a high. And all those red lines across the chart are times when the RSI got of the HUI gold ratio, RSI got above 70. So that means there's a big surge in the gold stocks at that time. So you want to sell on strength. And this chart helps you do that. If you look in 2001 rally up to that 2000, looks like about 7 high, the ratio, you go up and you consolidate, you went up and you consolidated, and finally you did kind of peak out. It didn't really pick the top. But over the last several years, going back to 2016, it picked out quite a few of the tops. And what I'm saying right now, when this ratio gets up around 70, RSI of the ratio gets up around 70, you're going to probably at least have a timeout in the uptrend.
Okay.
And it's one of the reasons why I'm kind of watching it now. So far, this HUI gold ratio, in other words, gold stocks are doing okay, but they're not doing great, which tells me that we're probably going to continue with the rally. It's going to continue until it gets too good to be true. And this chart will help define when that time happens, because that's when the RSI will rise to 70. And that'll be the time to at least take some profit in the market and maybe step aside. It could be just a sideways consolidation, or it could be a multi-month top. I don't know which one, but this is one of the indicators I'll be following. So right now, the RSI is coming around 50. So that's a safe place to even invest in here. That it's just has turned up, but it's not at any danger level. It's just a top of any consequence. So gold in general is still a good buy in this vicinity, even though GDX is pretty much up 50% over the last several months. It's got a long ways to go yet, so we're still early.
Perfect.
We're running out of time, I know. So
we have 2 charts left if you want to say. Perfect. Folks, we'll be right back with Tim Ward right after this break.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. We are joined right now by Tim Ord of the Ord Oracle. Tim, before we went to the break, we're looking at gold. Take a look at the weekly RSI for the HUI gold ratio. I liked what you were saying with the RSI. It's something to definitely keep track of. Now, we do have a silver and gold chart as well, which I'm very much looking forward to getting into. And then, of course, chart 7 as well.
All right. Let's flip to chart 6.
Yeah.
And this is kind of a value chart. It's a silver-gold ratio. So it's momentum is important, but the areas where this ratio stands, I guess, is important. Mm-hmm. So you can use the RSI on this too. It works just fine. You know, if it goes up too fast. This one picked out the top back in 2011 because the RSI of this silver-gold ratio, this is a monthly chart, matter of fact. So it's a monthly silver-gold ratio, and the top window is the monthly XAU. So I put the XAU instead of GDX, goes back further. But anyhow, you can use this chart. You can put an RSI with it to pick out the bottoms and the tops. Again, this chart picked out the 2011 top in the XAU. But anyhow, if you go back, this chart goes back to 1982, and usually there's value. So it has a relationship between silver and gold. And so when this ratio is low, that means silver is cheap compared to gold. When the ratio is high, then silver is expensive to gold. Mm-hmm. So right now, because I think this is still in the early stages of a rally here, but if it gets below 0.125, we're coming in at 0.0125, we're coming in at 0.011, and it's just staying low. It's not coming off of the market. And I shaded in pink other times when this ratio, either with lines or with shaded areas, where the ratio came in. It's not designed to pick the bottom. It's just designed to pick on the chart where the cheap, when that ratio is cheap compared to what the XAU is doing.
Right.
And so basically since 2016, this ratio has been relatively cheap, especially in that big COVID crash of 2020. You know, that's the lowest it's ever been. That was a great buy in the gold stocks, but we're still actually a good buy here. And what I'm saying value-wise, at some point, this ratio is going to rise back up to the blue area, which I got defined between 0.018 to look like about 0.021 in that vicinity. But yeah, if it gets up in that blue area, the horizontal blue bar I got going across the monthly silver gold ratio, is times when this ratio is expensive, and in turn the gold stocks may be expensive. So that's what I'm kind of looking for. Before this rally is over, I'm thinking this ratio is going to get back up into that 0.02 range. And that'd be another warning that the rally, which we're a long ways from ending, where we are right now, is the time to pull back the bullish horns. So I'm thinking this rally is probably going to last a while because this ratio is so cheap. If it was around above, say 0.016 or something like that, I'm thinking we're getting late in the rally. But now we're still in the pink area, so it looks bullish. Anyhow, it's we got quite a road in front of us, and I think it's going to be up. This was one of the reasons why I think this rally has a lot further to go. So we can flip to chart 6.
Perfect.
So this all goes back to short term. This is pretty good, picking out the short term swings. I probably should have took more of the chart, but this chart goes back about a year and shows the times. The bottom one is the 18-day average of the up down volume. Next window higher is the 18-day average of the advanced decline, and so it shows the internals weakness and strength and compared to advanced decline and up down volume on those advanced declines. As long as those two moving averages are above -10, the uptrend should continue. And it picks out the highs and lows fairly close. But what I use it really for is kind of seeing where the market is heading. As long as those two moving averages stay above -10, the uptrend should continue. If you look back in September, October, and November of last year, if you notice, both those advanced decline and up down volume were making higher lows, which I got lines on them, red lines to show that.
Yes.
If you notice, GDX was making higher highs. So that was a divergence. So the market was telling you it was running out of steam going into that, looks like October high, because every rally was weaker than the previous rally, even though the market made higher highs. The up-down volume advanced decline indicator was making lower highs, warning that you're probably heading into some sort of consolidation. But right now we don't have that. We're breaking above the previous high of December, and both those moving averages also broke above the highs of December. So it looks good. So how long can this last? It's hard to say. There's some other indicators that I come across that suggest we probably could rally all the way into July. Sometimes July, seasonality wise for the gold issues, is either can be a high or a low, and I'm thinking we're rallying into that time frame. It could be a high, so we'll see how that works out. But right now, short term, this rally is still in the early stages, and nobody's believing it yet,
right?
And which is good, because if they did, all these statistics would change. So
definitely,
and so far that hasn't happened yet. So you really got to buy in fear, and you really got to sell in optimism, and this chart kind of helps you do that. So we're still fine. How high is high? Don't know, but I'm thinking there's other indicators that at minimum the current rally should last into November of this year. Actually, that'd be the worst case scenario, and the best case scenario is rallying into 2027. So I don't know which one it's going to be, but as we go forward here, and as these indicators change, we'll be reading them and telling you probably what the next step will be. I didn't take myself out of this rally that we had a high in October. I did see that divergence.
Yeah.
But if you look at we're into a time where leadership will change. Sometimes the generals will lead and the soldiers will falter, and sometimes the soldiers will falter where the generals will decline.
Sure.
And we're into that rotation period now. So some stocks will perform, and usually most of these declines, Fibonacci-wise, will probably do minor pullbacks. So sometimes if you get too trade happy, you'll take yourself out of a good trade. So I kept that long position, and so far that's been, for me anyhow, the right decision, because I didn't see a top of any major consequence. It was just an ABC down, and now we got another impulse wave up going. So
fantastic.
Looks good.
Well, I know as Tigers will definitely be watching gold and the miners as well. Tim, thank you so much for joining us. We'll see you Tuesday.
All right. Thank you for having me on.
Absolutely. Take care, Tim. Folks, stay right there. We'll be right back for a short segment right after the break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. This is Jacob Shoup. I was just joined by Tim Ord of the Ord Oracle during the show. If you want to check out that segment, you can look at our YouTube channel at the end of programming today. Our producer is hard at work getting those clips up for you. Please consider giving a like and subscribing to our channel if you decide to do so. Take a look at Nebius right now, trading at 1.57% at 34.47. Today, you actually had some really, big sell-off, okay? All the way down to a low of 32.63, and then you had some major buying to the upside, 34.86, coming down just a little bit from that, but still doing quite well. The only thing I can imagine that is causing this, I'm going to take a look at TSSI, and I have a feeling it's doing the same thing, which it is, somewhat, not to the same extent as Nebius. But you had these guys from University of Washington come out, and so they had an AI reasoning model for under $50 and cloud compute credits. I don't think people are really understanding kind of what that means, right? These distilled models, and it's the same thing with DeepSeek, right? Are the training aspect behind all of it, right, is not going to be achieved with distillation. I mean, this is almost the same as almost like making a generic version of a drug, although it's not as good, is the way I would kind of label out distillation. As these models get better and better, that's really where the return is. Now, in theory, these larger companies could distill some of their models, right? Have a tiered kind of subscription model, which I really think they should. And you could run it for cheaper and more people will be able to utilize it. But I think people see this kind of stuff and they freak out like, oh my God, we're, overinflating the amount of money we're dumping into AI. I mean, these large companies like Google, Google isn't necessarily really getting any money from anyone, right? They're spending their own money to do this. You could make an argument, maybe OpenAI has a reason to, overinflate to some certain extent because they're not generating capital, more people giving them money. These distilled models will continue to come out and they'll continue to be cheaper to run. They won't be as good and they'll never beat the cutting edge model. Folks, thank you so much for joining me today. We'll see you tomorrow morning, 9 a.m. with Tommy O'Brien. Take care.